The news that the European Union is planning to place an embargo on Russian coal caused a slump in both the euro and the pound sterling. However, the decision has not been taken yet. European Council President Charles Michel also added fuel to the fire, saying that the European Union would have to impose sanctions against imports of Russian oil and gas. However, he pinpointed that such measures would be needed sooner or later. That's why most market participants concluded that the European Union would hardly impose sanctions right now. As a result, the market situation slightly stabilized. Now the euro and the pound sterling are making attempts to rise, though very slowly. The situation is similar to the one we saw during the first 2 days of the trading week. During the European session, the currencies were almost stagnant, whereas at the beginning of the US trade, they started losing value against the greenback. Today, the currencies might have repeated this scenario. However, the euro was suddenly supported by the producer price index report, which unveiled a rise to 31.4% from 30.6%. Economists had anticipated a more significant jump to 36%. Judging by the figures, inflation is likely to grow slower than expected, thus boosting the euro. Notably, compared to the US macroeconomic reports, the Eurozone statistical data looks disappointing. That's why even a small piece of positive information can considerably support the euro. However, the effect is likely to be short-lived, since the report reflects the situation in February. Data for March will hardly be that encouraging. Nevertheless, today's results may allow the euro to gain in value even during the US trade. It means that the greenback has every chance to decline. Let us switch our attention to the trading charts. The euro-dollar pair resumed falling after a short-lived stagnation near the local low of the previous week. The euro dropped below 1.0900. Although the currency is significantly oversold, sellers are still controlling the market. If the price settles below 1.09, it may slide deeper to the support level of 1.08. The alternative scenario will become possible after a rebound from 1.09 to 1.0950, and this action may spur a change in the market sentiment. Meanwhile, the pound-dollar pair downwardly broke the long-lasting sideways channel between 1.3105 and 1.3180. As a result, speculators became very active and pushed the pound sterling to the level of 1.3060. In other words, sellers made an attempt to return to the support level of 1.30, and thus nullifying the correctional movement. By the moment a decline in the pound-dollar pair has become slower, the pair touched the lower limit of the previous range, and the intermediate support level is located at 1.3050. If the price settles below 1.3050, it's highly likely to go on falling. How will going to unfold in the short term, we will definitely tell you in our next video review. Don't miss them and stay up to date with us. See you!